Good morning. You are watching a live daily market outlook for Tuesday, 15th of May 2012, prepared by Windsor Brokers. No significant changes in the market from yesterday, with the Greece still in focus, with the Eurozone financial ministers dismissing the Greeks' exit of Eurozone as propaganda. From the further highlights of the day, the release of German flash GDP showing unexpectedly high results, showing that the economy is gaining a pace ahead in the first quarter. The France, from the other side, posts zero economic growth in the first quarter. In Greece, the Greek leftists rejected the proposal for a technocrat government. The Greek turmoil keeps the pressure on the euro shares and the commodities as they posted their fresh lows during the night session. Housing improves in key states in the US, and also despite Germany's good data, the Eurozone is likely moving towards recession. Starting from Greece, that there is still unclear situation with the negotiations between the leftists and the president informing the government. The leftist parties rejected the last-ditch proposal by head of the state yesterday to put technocrats in charge of the country, as financial markets slid on speculation that political turmoil would force Athens out of the Eurozone. As mentioned, the President Papoulias has summoned party leaders to hear his proposal. Today they agreed to attend, but expressed little hope in it would resolve a deadlock which has left Greece with no government to steer it away from bankruptcy since an inconclusive parliamentary election 8 days ago. As said, the Eurozone financial ministers dismissed talk of Greece leaving the Eurozone as propaganda and nonsense yesterday, but said the country had to respect the terms of the bailout program agreed with the EU and the International Monetary Fund. If Greece can form a government and that government signs up to the bailout agreement, then it is possible some of the targets in the program could be softened. The chairman of Eurozone finance ministers, Jean-Claude Juncker, said. He also said that I don't support the idea that Greece will be leaving the Eurozone, and this is nonsense, this is propaganda, Juncker said. The exit of Greece out of the Euro was not the subject of the debate of today's meeting of Eurozone finance ministers, absolutely not, and no one argued about these things. Juncker said in his comments about Greece. As said, the euro hit its fresh 5-month low overnight, holding just above 128 level, with some corrective action seen in early hours of European session, mainly based on technically oversold near-term studies that pushed. But for so far, any action higher is seen corrective, as long as holding below 129 and more significant 129.50, 129.80 barriers. Cable is also in the slight corrective mode of yesterday's, last Friday's low at 160.50, with a brief break above 161 seen yesterday, keeping still a prospect for a further extension and further retracement of the recent down move from 163 level, as the pair penetrates some important levels, but still to see clear break above 161, 161.30 in order to confirm positive action. The dollar yen is still struggling to regain 80 barrier after yesterday's upside rejection and last Friday's upside rejection and a sharp slide from 80.17. That was the peak of the recovery. That so far found support at the 79.80 zone with the some prospects seen for a further recovery. However, a larger picture is still negative on dollar yen, and keeps the downside favored in the short term. Dollar Swiss is correcting the recent rally after break above a very strong barrier at 93.30 and extended so far to 93.71, just ahead of Fibonacci barrier at 93.88 and 94.00 as round figure resistance, with the upside still in play, and the current corrective pullback on overbought studies seen so far well protected above 93, and basically only loss of 93 handle would be harmful for the pair's near-term action. Gold has hit another fresh low at 1547 yesterday, this morning, and continues its larger descent of the latest lower top at 1671, with prospect of a possible retest of key support and double bottom at 1532.22 zone as the very likely scenario, with the corrective bounce higher seen short-lived as long as 1600 as initial barrier holds the upside protected. The crude oil is in the near-term corrective action of yesterday's fresh low at 93.64 when the price sharply dropped after losing previous lows at 95.18.16 and losing 95 round figure support, dipped sharply to 93.64 so far. The negative outlook still dominates, with some action higher seen as a corrective, as long as initial barrier at 95.20 keeps the upside protected. Big calendar for today. We're going to take a look now at it as the Australian Central Bank announced their monetary policy, and another figure from Australia. New motor vehicle sales came in disappointing minus 0.7% compared to 4% of the previous month release. Japanese household confidence slightly weaker than previous release at 40.3%, came at 40 with 40.9 forecast for today. A surprise for the beginning of the session was Germany's preliminary GDP for the first quarter that came in a surprisingly high level at plus 0.5% versus minus 0.2% of fourth quarter of 2011 and 0.1% forecast for today. That gives a good potential for a further gaining a pace of the economy's recovery. However, not a big impact so far seen on the single currency, as the outlook from the other countries still remains bleak. From UK at 8:30 GMT is the trade balance for March. The trade gap is expected to narrow to minus 8.4 billion sterling compared to minus 8.8 billion sterling of the February's release, and at 9 o'clock GMT number of data from Germany and the Eurozone. German zoo economic sentiment for May is forecasted to decrease to 19 compared to 23.4 release of April's reading. Eurozone flash GDP for a first quarter is due at the same time, and a slight improvement to minus 0.2% is forecasted compared to minus 0.3% of the fourth quarter of 2011. And Eurozone's zoo economic sentiment for May is also expected to drop. 11.7 is today's forecast compared to 13.1 of the April's release. America's start with the U.S. inflation due at 12:30 GMT. April's reading is forecasted to come lower than the previous at 0.3%. 0.1% is the forecast for today, while core CPI for April is expected to stay unchanged at 0.2%. Retail sales for April are also expected to decrease to 0.2% compared to 0.8% of the March release, while core retail sales are also expected to go lower. 0.3% is today's consensus compared to 0.8% of March. U.S. Empire State Building Index, Empire State Manufacturing Index, I do apologize, for May is due at the same time, 12:30, and quite optimistic forecast for today. It's 9.3 compared to 6.6 of April's release. Long-term purchases for March are due at 1300 GMT, and also jumped to 19.4 billion US dollars is forecasted for today compared to 10.1 billion dollars of release of February. FOMC member Duke is due to have a speech at 13:30, while U.S. business inventories for March are due at 1400 GMT, and a slight decrease, 0.5% is today's forecast compared to 0.6% of February is seen for today. U.S. housing market index for May due at the same time 1400 GMT is seen slightly improved. For today, 26 is the consensus versus the 25 of release of month of April. Now we're going to take a look at the currencies and see technical points for the day for major currencies and commodities. Starting with euro, as shown on the 4-hour chart, the pair is still in the strong downtrend of its recent lower top at 132.82 with loss of 129, strong support zone where the pair at the end of last week attempted to base was short-lived, and the gap lower opening yesterday has put additional pressure on the pair that dipped as low as 128.13. This is the low of early morning towards the end of Asian session ahead of current corrective action, as studies on the lower time frame centered the oversold zone and were quite extended. This is so far seen as corrective action, with 129 now offering a very strong barrier on the upside as static resistance, as well as 20 days exponential moving average. That is our first barrier ahead of 129.47 bear trend line of 132.82, and more significant 129.56, 129.80 barriers, break of which would basically ease the current bear pressure and allow for stronger recovery of further retracement of 132.82, 128.13 descent. Larger picture maintains firmly bearish tone as daily studies are into negative territory and pointing lower after accelerating losses after a loss of very significant support and range floor at 130.00, with the immediate focus at 128 as round figure support, and then 127 again round figure support, with the yearly low at 126.22 now coming in focus in the short-term price action. Any corrective movements are seen limited by 130 previous resistance, previous support now acting as resistance, and basically only break above this level. This zone actually would avert downside risk and bring the pair back into the multi-month range that was defined by 130 and 134 zone. The British pound remains in the short-term descent of 163.00, peak of 30th of April 2012, with the 160.50 seen so far. This was the low of yesterday, just below 50% retracement of the up leg from 158.17 to 163.00, with the current action higher seen as a corrective. The brief break above 161 as initial barrier. 160.90, 161 was our initial resistance. On the upside, they reached 161.22. For now, the downside remains supported at 160.85, where the pair found ground during the overnight session, with the weakening tone on the hourly chart as studies started to point lower. And as long as 161.22 as initial barrier stays intact, there is still risk of further reversal of the short-term corrective action and possible revisit of 160.51 and the more significant 160.00 support that marks also 61.8% Fibonacci retracement of 158.17 to 163.00, and basically loss of 160.50, 160.00 is to confirm the negative tone and open way for a further extension, possible retest of initially 159 and then 158, both round figure supports and strong support zones for now. On the upside, break above 161.22 and 55 days moving average, as well as 38.2% retracement is required to improve the near-term action and mark possible base, near-term base at 160.50 for a test of important barriers on the upside at 161.80 and 162.00. That will be confirmation of higher low at 160.51 and possibly to open way towards 162.50 and 163.00. Outlook on the daily chart is still weakening as loss of momentum increases possibility of further reversal of the larger uptrend from a yearly low at 152.33, mid-January low that peaked at 163.00. Immediate support 160.50 as said, and trendline support at 160.26 ahead of 160.00. That is our key level at the downside, loss of which would open way for further retracement, and 158.50 would come next as 38.2% retracement ahead of 158.29 200 days moving average. For now, the golden cross of 90 and 200 days moving average gives a good support for the pair, and further extension higher of the 90 days moving average would be a good signal for attempting to build the higher low and the possible extension higher, with the break above 163 required to resume the uptrend, and open levels at 164 is the next one, and the possible retest of 165.50 and 166 on the longer term. Dollar yen is still in the sort of consolidative mode of 79.42, low of 9th of May, but upside still remains well protected at 80.00 as brief break as seen yesterday touched 80.17 ahead of a quick reversal. The downside is for now protected at 17.967. This was the low of yesterday, but quite weak prospect for further extension as 20 days exponential moving average holds the immediate price action ahead of 80.00. That is round figure resistance, and the 55 days exponential moving average, as well as previous high at 80.17, where is also the main bear trend line, and basically break above these levels, as well as 38.2% retracement at 80.32 is required to resume this near-term recovery of 79.42 and open way for a stronger reversal, with the clearance of 80.60 previous peaks, as well as 50% retracement required to confirm. Negative tone dominates on the larger time frame as the pair struggles, as the pair failed actually to break 90 days moving average and the main bear trend line of 84.08, and while holding below these levels, immediate risk is seen on the downside as 79.42 and 79.13.00 are the immediate downside targets, loss of which would open way for test of a strong dynamic support at 78.43, that 45, pardon, that marks 200 days moving average. Dollar Swiss's near-term price action is in the corrective mode after hitting a fresh peak at 93.71. This was the high of today, hit during the Asian session, as studies on the 1 and 4 hour reached their overbought zone and quite extended. Actually, they reached their extreme levels. The corrective pullback was just a logical reaction. Strong support, initial support is 93.30, the previous high of dollar Swiss, as well as 61.8% retracement that was cleared yesterday ahead of 93.00 as a breakpoint weeks opening yesterday with the gap higher, as well as 38.2% retracement of the latest uplift from 91.93 to 93.71, and basically ideally reversal at or above this level would keep the immediate bulls intact for a possible further extension higher, with break above 93.71 to open next target Fibonacci level 76.4% retracement at 93.88, and the 94.00 is around the figure resistance. A positive structure on the larger picture chart still keeps the upside favored with for possible extension towards 95 and 95.50, our next significant targets in the short term, and of course 95.93 is the key barrier yearly high of 9th of January 2012. Only loss of 93.00 would delay immediate bulls in favor of stronger reversal that might be targeting 92.80 and 92.60 Fibonacci level, as well as 92.55, the higher platform lows of 10th of May 2012. That will be seen in case of a break below 93.00 as our initial and strong support. Crude oil remains pressured mainly with the Greece's problem, as well as slowing of Chinese economy that might imply the lower demand of the oil, of the energies worldwide, and this is the main driver of the oil price in the short period of time, as the June crude oil dipped from the beginning of May from 106.4 to 93.64. That was the low of yesterday. Negative tone remains dominates on the daily chart and keeps the downside favored for now, with some corrective action currently underway, seen limited with initial resistance at 95.20 zone previous lows, and also where is the 95.46, the 20 days exponential moving average, ahead of a more significant 97.67 corrective range top of 10th of May, and 97.71 55 days exponential moving average. That is basically, that is for now expected to limit the upside. Any serious, more serious movements higher needs to clear these levels, and to avoid immediate downside risk, I would say the gain of $100 per barrel would be required. Yesterday's comments about ideal price and expectations by Saudi Arabia, the top producer of oil, that $100 per barrel, around $100 per barrel price would be ideal for the markets, still has no more significant impact on the price as it continued to trend lower despite the current crisis with Iran and the US and Eurozone sanctions towards Iran's oil, as well as Asia as the main consumer of Iranian oil, still keeping the pressure on the oil price. However, some analysts still see that the prices might go higher based on the expectations and based on the current situation in the world, political and economical. For now, the technical outlook sees the further pressure of the oil price and the possible test of our next target at 92.70 as the very likely scenario. The yellow metal remains also pressured by Greek situation in Greece, as it dipped further and posted fresh low at 15.48. This was the low of today, posted in early hours of the day as a part of the larger down move and the latest down leg of 1657, with loss of 1600 level as round figure support, and now turning focus towards our key levels at 1522, 1532, double bottom of September, December 2011. That might open way for a more significant correction of the yellow metal of its strong uptrend of past 10 years. Currently the pair is attacking, the gold price is attacking, 1546, which is weekly 90 days moving average, and the break here, as well as 1542, 61.8% retracement of the latest upleg from 1308 to 1920 is expected to turn immediate focus down to 1522.32, loss of which has the next static support at 1478. Of course, first we need to see the clearance of 1500 as around the figure support. Negative structure on the daily studies keeps the downside firmly in focus, and only regain of 1600, 1612 would ease the current bear pressure. That was all for today. I would like to thank you all for attending our sessions. This session will be shortly uploaded in the YouTube Windsor Brokers page called Windsor Brokers Forex, for all those that might have missed any part of the session. We're back tomorrow morning at the same time, 7:00 GMT. Until then, I wish you a nice day and successful trading. Good luck.